All right, guys, back to work tonight. Hope you guys had a fantastic weekend. Hope you had a great day. Hope you made some money out there. It's back to work, though. We have a lot to cover in the first video newsletter of the week. We get the end of the month tomorrow. Wednesday, of course, is end of the month. And boy, I'll tell you, a lot of great trades I'm tracking for tomorrow. Got a lot of ranges on the charts, and man, you know me, I love me some range-bound markets. Lots of money-making opportunities for the end of the month tomorrow. I'm going to cover all my favorite trades in the video here tonight. Then we get a game plan to make some money on Wednesday, end of the month. Before we jump in and get the game plan going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoy this stuff, do me a favor, as always, hit that like button and give me a shout out. Give me a holler in the comment section below. Thank you so much for tuning in, supporting the channel. Let's get back to work, though. Wednesday is not going to trade itself, and there really are a lot of great trades we're tracking for the end of the month. Tomorrow, boy, ranges across the board, right? Range on the Emini, range on the Nasdaq, big old range here on the crude oil. You know, all three of these markets are a little bit different, but there's one thing in common: reversals. It feels like reversals are going to be the name of the game here for tomorrow. Buyers looking for reversals off support below us here. Sellers looking for reversals off resistance overhead. We've got a big debt ceiling vote tomorrow. These ranges will probably act like magnets. So lot of great reversal opportunities we're going to talk about tonight in the video. Now, before we go over how to buy that reversal off the low and sell the reversal off the high, before we talk about each individual trade, though, let's all get on the same page for tomorrow, because tomorrow, it's a Wednesday. It's not your average Wednesday. It's the end of the month. End of the month usually means an uptick in volatility. So we should expect the next few days, right, probably into the end of the week here, Wednesday, Thursday, Friday, we should be expecting to see an uptick in volatility because of the end of the month and that kind of pending debt ceiling vote that we have on Wednesday and again on Friday. So end of the month is one thing on our mind tomorrow. The big news that we know about tomorrow is the JOLTS report at 10 o'clock Eastern Time and the Beige Book, of course, at 2 p.m. Eastern Time. Remember, 10 o'clock news is oftentimes one of the best times to be trading, so make sure you're paying attention tomorrow morning. We'll be in our trading, of course, tomorrow morning for that 10 o'clock news. So definitely something we'll be tracking for tomorrow. And the third thing, again, is that debt ceiling vote. We heard from, I think it was Massey, one of the House Republicans a few moments ago, kind of casting his support for the debt ceiling agreement that they've made over the weekend. We're going to see, you know, obviously that's one big variable, one big wild card for tomorrow, but that will definitely be something that could really move these markets around tomorrow. So we'll do our best tonight. We'll plan our trades, and then tomorrow we'll try to trade our plan, knowing that we may have some unpredictable updates, right, coming out of Capitol Hill. So be aware of that. So end of the month volatility, JOLT at 10, Beige Book at 2. And again, will this debt ceiling agreement, will the vote go through tomorrow? Will there be any last second changes? That, of course, is something we're going to be watching closely tomorrow in our trade room. Back to our charts, though, because, you know, the money is made on the charts. And speaking of which, if you like making money, make sure you watch all the way to the end of this video tonight, because I'm going to cover all my favorite trades across all three of these markets. And every trade I talk about tonight can be applied to your favorite market. So don't go clicking off after your favorite chart is done. I will wrap this stuff all together. I'll make it worth your while to watch all the way to the end. We'll go to the S&P first. We'll go NASDAQ. And then, of course, we'll go over to the crude oil to finish up. Guys, be aware, this is a tick chart. You can see tick charts, all the time frames, upper left-hand corner. And this, of course, is always the 21 EMA. If you're joining us here for the first time right now, there are three key insights on the S&P and the SPY that are pretty much tipping us off to where the best trades, and kind of one of the reasons why I said reversals are probably going to be our bread and butter here for tomorrow. The first thing is we're very bullish overall. If you look at a 60-minute chart right now, you'll notice we're pretty bullish overall. So the overall directional bias right now is quite bullish, really across the S&P and the NASDAQ. The second thing you want to be aware of is we're really kind of right up around this big block of resistance resistance. We talked about this stuff last week on the videos last week. If you go on a 60-minute chart right now, you'll notice we're some big highs up here. So we're bullish, but we're running into quite a bit of overhead, really big, strong overhead resistance. The third piece of this puzzle is this kind of bearish move into a trading range. Now, ranges act like magnets. And so if you think about kind of the scenario right now, we're bullish overall, but we're running into overhead resistance, right? So, think about it. If this range acts like a magnet, if we were to go higher, buyers would have a really difficult time buying up there, right? Because you've got all of this level or all of this area of resistance overhead. So I really like the idea of maybe a buyer failure, a reversal off the high. I like that trade a lot for tomorrow. Now, kind of going along with this though, imagine now if we go lower. If we go lower, now we kind of put ourselves in a much more desirable area for the buyers. Again, we're still overall bullish, right? This is not an overall bear market. So as we go lower, you have to think that it could be a bear trap down there. It could easily be a place where buyers come roaring back in as we start to run into some bigger levels of support that are waiting below us. So, looking at that range as a magnet, reversals, right? Again, a reversal off the low, I think is very, very attractive because that allows the buyers to participate in this bullish trend, but not have to buy too high, right? That's why I said earlier, I think reversals are going to be kind of our bread and butter here as we go. So there really are two things we want to cover tonight. Later on in the video, I'll talk about my favorite reversal patterns off the high. There'll be a little bit more aggressive reversals off the high. But let's start first though right now. Let's start first by talking about if we go lower. Now remember, we're overall bullish, right? So as we go lower, we got to be thinking what? Buyers are probably waiting down here. Now, of course, that big variable, that debt ceiling kind of vote tomorrow is a very big variable. So there definitely may be some shorts we can take on the way down. As we go lower, if I wanted to sell this move going lower, what do you think what's my biggest concern? If I want to sell going lower, what's the big concern? Yeah, the big concern is selling too low, right? We don't want to sell low. We want to sell high. I definitely think there's opportunity to be a short seller as we go lower. But I have to use one of my favorite entry patterns. We talk a lot about this in the free trading course with trap. Right, you've got to be thinking about trap setups. I call them trap setups in my trade room and, of course, my free trading videos, right? But trap setups off the high. So as we go lower, if we do end up going lower, and again, I'm going to talk about the reversal off the high here in a moment too, but as we're going lower, you've got to be thinking about traps, right, as we go. Now, as we take out, for example, this area down here, right, this 41.96, 41.89 area, that area seems to be a very attractive area for that reversal. If we do end up getting down into that we'll call it 41.95 area down there, right? I'd like to be a buyer at that point. What's the problem though? What's the challenge? The challenge is momentum, right? Momentum is a challenge. And so whenever we're trying to kind of pick a bottom in a somewhat bearish, short-term momentum move like this, we have to, let's put it this way. It's a lot easier to be a buyer when I have momentum at my back, right? It's a lot easier to be a buyer when the market's kind of moving higher, right? Okay, so if we're going lower and I don't have that momentum to help this trade move in my favor, I have to do something else. I have to use, we have to use what I call a failure pattern to trap in some sellers and use their stops as the juice, as the fuel to reverse it. So whenever I'm trying to, if I have a bear market into a level I want to buy, remember all of that bear momentum, it might keep this thing going lower for a while, right? So I have to time the entry properly. And the best way to turn this thing around is to use what we call a failure pattern, right? Now in this one, I'm going to want to use what I call a two-try failure. All right, this is a pretty simple idea, right? Momentum is very bearish, and so I have to get some other catalyst to fuel this reversal. And to do it, I'm going to try to rope in some of these bears down here, and then I can use their stops as that fuel, right? Because if I can get the bears to take if I can get the bears to try a couple times, right, their exits now become the gasoline, right, for that reversal going back higher again. Now, my favorite entry on this is a little tiny trap right below that low. Right below that low, that would be my favorite way to time that reversal off the low. We call these crown reversal patterns in our trade room. It's basically just a kind of a kicked up example of what we call a failure setup, like you guys are learning in the free trading course. Which reminds me, by the way, I know most of you guys have taken that free trading class. I'm going to be talking about a lot of these entry tactics, and I actually teach all of the entry tactics in my free trading course. If you haven't taken that free class yet and learned all the entry patterns I'm talking about, I'll put a link up there for you in the upper right hand corner. Grab that link, take that free trading course, because the strategy that you'll learn in that short video series will teach you a simple trick to know exactly where the best winning trades are going to be each day. And I'll teach you my 4 favorite entry patterns to help kickstart you making money on your own out there. If you're missing the best trades each day, if you're taking too many losses right now, definitely grab that link, take that free trading course. And in that short video series, you'll learn about how to use, for example, how to use the sellers and use their stops, right, as fuel for that run going higher. Now, let's talk about a couple more variations on this, all right? Because sometimes what happens is sometimes we get these V bottoms down here and they just rip right back up. Remember, we're not a bear market, right? We're an overall bull market right now. So what if we went lower and we don't get that 1, that 2, that beautiful 2-try failure pattern off of that low? What else could happen? We might end up V-bottoming off of that low and doing something like this, where it kind of skips up and starts to run back higher like that. If that happens, what's our problem? Our problem is we don't want to buy too high. What's the best entry pattern to avoid buying too high? It's a trap, right? It's a trap. So trap setups are really going to be very beneficial. Oftentimes what happens is if they V-bottom off the low, it'll oftentimes pop up and begin to grind higher like this. Okay? Simple. Mark off the trend line off the high, find the channel off the low, and then like we always say in our trade room, look left, find some prior swings. Swings are where traps live. And ideally, you want to get just a little bit right underneath that moving average. Grab a trap set up, maybe a failure pattern off the moving average. You guys learn this stuff, right, in the free trading course. But think about if it kind of V-bottoms right off of that low. And again, if we are going lower, remember, with this overall bull market we're in right now, you have to be weary about buyers coming in. So as we're going lower here, we're looking for bull traps, right? Looking for shorts above, right, above those highs. Okay? We get down to those zones, we trap the buyers in, let them try a couple times. We use their stops as fuel to get that reversal going back higher. That's the basic idea we'll be trying to execute tomorrow morning in our trade room. All right, so that's what happens if we go lower. It's my game plan if we go lower. What if we go higher here? You know, if we go higher, this is also a pretty desirable trade if we go higher here as well. Let's go grab a look at the Nasdaq here, because of course the Nasdaq and the S&P are pretty similar here. They're not always kind of exactly the same, but they're definitely very similar here today. There are 3 main components right now on the Nasdaq or the QQQs. One is we're very, very bullish right now on the Nasdaq, right? I mean, look at the size of, look at that. Very, very bullish right now. You probably don't need me to tell you that. The second component is the size of this move. I mean, look at how big look at this thing, right? It's goofy how big that move is. And so, S&P was into resistance, right? The Nasdaq is just way too high up right now, obviously within, relatively speaking. So the S&P had resistance to worry about. The Nasdaq has this huge move, in which usually big moves like this, they tell us that, we've got to go a bit lower to attract more buyers into the market. Make sense? Right? Okay, so we have to think that a move lower is very much very likely just to attract more buyers in. And of course, the third component is just like the S&P, kind of bearish into a trading range. And these ranges, of course, they act like magnets. So just like on the S&P, if we go lower, it's an overall bull market. So I like the idea of a reversal off the low, right? Maybe a 2-try failure, a little bear trap reversal off of that low. I like the same game plan I just talked about on the Emini. I think can be applied to the Nasdaq as well. Let's talk about if we go higher here. Okay, now this is where things get a little bit more challenging, because if we end up going higher, there's kind of two things you want to be aware of, right? First is in our video classes, we talk about what we call range rotation. And so you'll notice as the market rotates back and forth, right? That's how ranges work. They rotate back and forth. Well, think about it. As we go lower, now if we end up rotating higher here right now, that is a lot of momentum, right? It's a lot of bullish momentum. Now, as we mentioned before, we're already an overall bull market. So we have to be careful trying to short this thing off the high, don't we? Because in this situation, if we rotate off the low, right, bear range, rotation off the low, if we rotate off the low, what is it going to do? It means both the long-term momentum, right, the long-term trend, the 60-minute trend as we call it in the trade room, and the short-term trend are both going to be very bullish. Now, we have to assume that because of the big move we've seen over the past couple days in the NASDAQ, we have to assume that buyers are probably not too interested in selling, in buying into these highs. So I definitely think the sellers have a great chance for a short back down into that trading range. Okay, so this will be very similar to what we talk about in the S&P. As we go higher, okay, if we go higher, again, we may end up going lower first. And again, you guys have a pretty good game plan to make some money on that. Already we covered that on the S&P. If we go higher here, momentum is great, right? Momentum is great. We get the short-term momentum, long-term momentum. Momentum's great on this one. What's my challenge, though? What's my problem? My problem is I'm buying high. Right, I'm buying at resistance, right? I'm buying relatively high after a really big move higher. So what's the best way to avoid buying too high? You know this. It's a trap setup, right? Like you guys are learning in our free trading course. So as we go higher, if we go higher first, right? Traps are definitely going to be the best bet for this. And we know where the market wants to go, right? We know it wants to take out and retest that high. Anytime we see a strong move higher like this, we're expecting a pullback and a retest of that level. So that's how I'll be looking to get into this if we end up going higher, trying to go back up and retest the high here. Now, keep in mind, we may get that, and again, this would be called a bear trap, right? We may get that bear trap. The buyers may take out these highs up here, right? We've got resistance. This whole area, notice how I drew in the pendulum swing. The amount below the range is the amount above the range, right? That level, this whole area up here really is a very attractive area for profit taking for the buyers, and of course possibly some reversals for the sellers. Now, I talked about earlier how if I want to buy off the low, right, in an overall, well, in a short-term bear market like that, I needed to kind of trap in the sellers, right, get the sellers to commit, because I don't have momentum on my back, right? So I'm going to use those stops as fuel to rip this thing going higher, right, below that low. So if you understand the idea of how momentum works, right, if we have a very bullish move going higher here, and I want to try to sell off that high, I don't have any momentum on my back. In fact, I have both long-term and short-term momentum going higher here at this point. So what I have to do is I have to do two things. One, I have to let the buyers struggle. I have to basically you have to make sure that they're not going to rip this thing to those highs. Right? This could easily, with the debt ceiling vote tomorrow, who knows, right? This could easily bear trap off the low and just punch and run through. I'm not a big fan of trying to pick a top on this. All right, picking tops and bottoms is just an easy way to lose a lot of money in a short period of time. What I'd rather do is wait and see what the buyers do up here. Remember, this is a horrible place to be a buyer. Okay, I know we're bullish, but not at the high of that range. You know what I mean? Not such a big move higher. Now, again, it may keep going, right? But we don't know what's going to happen. We're going to play the odds, right? The odds are not very good out there to be a buyer. So what I'm going to do is I want to let those buyers try a couple times and see if they can keep it going, right? If they can, we'll call it a breakout. If they can't, though, then we know we have them right where we want them. Now, then we know we have the stops are sitting there now. Remember, guys, the easiest money you'll ever make is when you're selling off resistance and the buyers get stopped out of their long positions, because if you're a buyer and you get stopped out, the only way out is to sell your way out. Okay, now watch how I draw this, okay, because whenever we go against the long-term trend, I like to use these crown reversal patterns, right? That traps it up off of the high there. This is my favorite way to short off the high. Again, as we're going higher, we're looking for traps, again, as low as we can. As we take out these highs, we then look to rope in some of these buyers, right? Get those rookies chasing it, and then look for that nice strong signal candle. You guys are learning the signal candles in the free trading course. Get that nice strong signal candle and look for that reversal off the high there. Okay. Now, keep in mind too, like I mentioned earlier, we may end up getting up here and it may just get crushed right back down again. How would you sell it? Because again, I'm not a big believer in picking tops and bottoms, right? I'm not going to try to short into that high there. How would you do it? Well, remember, if it V-tops off the high, right? If it pops up and begins to kind of grind down like that, right? What do? We draw that trend line off the lows. We bring it up around the highs. You got it. We look left, find some prior swings. That's where traps live. I always recommend find those prior swings. And then don't forget, this could be any of the entry patterns you guys are learning in the free trading course, right? Could be a trap setup like I'm showing here. Could be a buyer failure pattern above the moving average. Could be a pullback combination. Remember, the range is the magnet, right? So you want to go up, try to time this reversal off the high. If all we get is that V-top, as I'm showing right now, just simply don't chase it going lower. One of the easiest ways to lose money on these, if it pops up and begins to grind back down, is now you've got that FOMO, right? Now the FOMO kicks in and you're like, shoot, I don't want to miss this move. And the minute, it's almost like the market just knows what you're doing. Once you sell, right? Once you short that thing because you don't want to miss the move here, that's when it pulls back and you get stopped out. All the professionals are waiting for that bull trap. Okay, and that's where we get the best entry off of that high. So just watch that kind of V-top reversal here. And then one more thing too, if we were to find our way up into these highs tomorrow, if the buyers were to hold a pullback, not struggle 1-2 back down, but actually hold a pullback and jump off the 21 moving average and convincingly, as I always say in our trade room, convincingly break through that high, then I know we have a breakout, and now I can go out, mark off the high, I can mark off the low, I can find my prior swings, and what do we always say? Don't miss that first test. Don't miss that first test off the low of that channel. Okay, so again, as we're going higher, we're anticipating buyers may struggle, and if we do, we can look for that short back down again. But if the buyers are lighting this thing up, if they hold that pullback, and again, if they jump off that moving average and again convincingly break through those highs. Remember, we see a lot of these. We see a lot of these, right? Where it'll pop up, the buyers will struggle a few times and then drop right back in, right? If they can hold that pullback and go, all right, now we know we've got the proof that we need, that we have a reversal. Because again, we're an overall bull market. And remember, guys, this will also apply to the S&P as well. Everything I'm talking about right now as we go higher can also be applied to the E-mini as well. All right, guys? So again, I like the idea of the reversals, but overall bull market, debt ceiling vote tomorrow, we'll be ready for it. We'll definitely be ready for no matter what happens on the charts here for tomorrow. All right, let's wrap it up tonight on the crude oil. Now, oil has, let's see here, there are probably three main components right now on the oil. One is, if I zoom out here quite a bit, you'll notice that we're pretty much in this kind of bullish, somewhat bullish, right? Bullish into basically one big trading range, okay? It's basically what's going on right now. Okay, that's kind of the first clue. We're bullish into a trading range. Now, when it comes to range-bound markets, you want to trade the edges. Okay, what do I mean by that? Well, for example, the edge top. Look what happens. They take out the edge top. They go back into the range. Ranges act like magnets. Where are we right now? We're right around, around the edge bottom, right? So we basically take out the top. Right? We reverse at the top. Now we've made our way all the way back down, and you have to think this is a great place for, you guessed it, a reversal going back up into that trading range. Okay, so one clue is the trading range. The second clue is where we are in relationship to the trading range. Again, we're around a major area of support below a bullish range. What's my third clue? The third clue is this channel. Okay, this channel going lower, we call these pop and grind channels. You'll notice this is a pretty strong move down here for the bears. It kind of runs lower and begins to grind going lower. Oftentimes, these grinders, oftentimes called spiking channels as well, what happens is you can draw a trend line off those lows up around that high, and this becomes a great place for a profit target if you want to get long, okay, or a possible bull trap for a short back down again. Most of the time, if you take away this trading range, right, take away that trading range right now, take away this area of support here, and the best way to do this is to wait for the pullback and short that, right, and short the top of that channel. All right, that's a very, very common way to trade. And of course, you've got prior lows there. Okay, so that pop and grind channel suggests that as we go higher and get above some of these prior swings, running into the top of that channel, again, good target for the long side. Also, good spot to look for a short on the way down. Okay, now a lot of this will seem very similar to the NASDAQ and the S&P because it really is almost the same thing. We are definitely looking for long trades here right now off the low. What do you think is the best way to be a buyer if I'm a bit bearish right now? It's a bear trap, right? Bear traps will always be the most effective way, most consistent way to make money when you're trying to either pick a bottom, right, or you're trying to reverse this move going back up. Because again, it's a lot of bearishness, right? So think about these two patterns, okay? One would be we try once, we try twice, I've got that bear trap, and up from there, right? This would be similar to that two-try failure I talked about earlier. And again, you want to try to buy, you want to try to rope in the bears in this example. That way their stops are going to be the gasoline, if you will, the crude oil, if you will, right, to run this thing higher. And again, you'll learn about what the entry techniques look like in that free trading course linked up in the upper right-hand corner there. So we'll cover more of that. The next thing is, if we were to start to rip higher, right, if we were to start to really race higher here, what's the best way to buy it? Yeah, traps, right, because now you're trying to avoid buying too high now. Okay, so whether or not we kind of struggle down here and try a couple times, that type of two-try failure, or if we wound up kind of punching it and running higher here overnight, we basically have to look for the same basic pattern, just simply different variations of it. Because again, we want to buy as low as we can, right? Because we anticipate there may be bears coming in around prior swings, around the top of that channel. I don't want to be buying into that area. So I want to make sure I'm buying as low as I can. So you want that trap. And then again, if we do find our way up into this area, how would I sell it? How would I sell it? Remember, we're overall bullish. We're going to range above us. How would you sell something like this? Patiently. You know what I mean? Very patiently. We would expect this thing, if it can get through some of these areas here, I'd expect this to find its way to go higher. But if we start seeing the buyers coming out, trying once, buyers coming out, trying twice, they're trying to run higher here. Now, remember, it's a very strong move down here. So one of my failure patterns could easily be used for basically for a pullback or a buyer failure, right? Sell buyer failures off that high here. Again, I want to make sure I really rope those buyers in. Let them try twice on this just because of that range that's above us acting like a magnet, okay? That's we want to sell it as we go lower. And then if we go higher here, we talked about the trap entries going higher, but remember, keep in mind too, right? This may pop up and begin to grind. Remember, this range is a magnet. We're coming off that range low. So if it does pop up and grind, then it's a game of patience at that point. Now we mark off that high, we mark off that low, we begin to mark those swings. And what do we not do? We don't miss that first test off of that low. Now remember, there's a very big difference between this pop and grind higher. Then let's say we pop up and now buyers once, buyers twice, right? See the difference there? The difference is higher highs in price versus lower highs in price, right? Higher lows in price versus lower lows in price. They seem pretty similar, but they're pretty different when you look at the fundamentals behind them. And again, it could be a bear trap. It could be a buyer failure pattern. Any of the entry patterns you guys are learning in the free trading course can be applied to that area. All right, guys? How about going lower? What do we do if it goes lower? If it goes lower, we are ultimately looking for the exact same thing. As we go lower, we're trying to trap in some of these, right? Some of these sellers. And again, we're pretty bearish here overall, right? We're pretty bearish overall. So again, trying to pick a bottom, I really like this area around 68.80 to 68.25, 68 and a quarter there. But again, we're overall pretty bearish here. So you want to try to rope in some of these sellers, right? Get them to commit, use their stops as fuel, and try to punch this thing back going higher. Right? If it was to go lower and then blast, right, and rip off of that low, okay, now we know it's all about bear traps, getting in as low as we can, right? So if we do end up going lower here, the plan is pretty much the exact same game plan. We'll still look for that pop up. If the buyers begin to struggle, we can then look for that short back down again with a buyer failure pattern, right? So as we go lower, short into the bounces. We're not simply blindly shorting the bounces, right? We're going to let those buyers try a couple times and short into their stops because of where we are, because we're at support with a range down below us. All right, guys? Boy, great game plan now for tomorrow. The big variable is that debt ceiling vote. I would not be surprised at all if we see some bumps along the way tomorrow. But that's all right, though. Tomorrow morning, we'll be in our trade room. 8 o'clock Eastern time, no matter what happens. The game plan is ready, and we'll make some adjustments no matter what we see tomorrow morning once that debt vote starts to come out or if anything happens in between. Now, don't forget, guys, we get together every morning, 8 o'clock Eastern time. If you're looking for a great place to come out and learn and trade along, I'll put all of the membership links for the trade room. I'll put everything in there. I'll put all the free course links. Definitely take that free trading course first. That will get you on the right track. Learn the fundamentals of how the strategy works, get you making money on your own, and then that would be warmed up to come out and trade with us sometime soon as a member of our morning trade room. If you have questions, if you need any help getting into the trade room or the free trading videos, the easiest way to get help is to call the office, right, or use that live chat button in the lower right-hand corner. All right, guys, I'm going to wrap things up here for now. The game plan is ready for tomorrow. What do you think, right? What do you think? I'd love to know your feedback in the comment section. And if you enjoy this stuff, make sure you subscribe, hit that like button, and I will see you guys same time, same place tomorrow night. Hopefully I'll see you sometime soon, though, in our morning trade room, 8 o'clock Eastern time, every morning at the opening bell. All right, guys, I'm out of here for now. Be well, be nice to each other out there, and be here next time. Adios, amigos. Bye-bye for now.